Hello and welcome to Pro Trader Strategies market commentary for Monday, August the 15th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get it on. Well, we do have some economic data today, despite the fact that it is a Monday, which is usually a data point day, it seems. But we got Empire State Manufacturing Index came in at negative 4.2, was expected to be a positive 2.1. Now that is a lot worse than expected, but generally speaking, that might cause the equities to sell off. But no, it has pushed them to new historical highs, and with great vigor in that. The Fed probably isn't going to be raising rates anytime soon. Even Bullard said that he might not be looking to raise rates anytime soon. So that is pushing the equities higher. We also got NAHB, which is National Association of Home Builders Index, came in at 60, which was expected, the 60. So right in line there. Other than that, not a whole lot of economic data. It's also a French and Italian bank holiday, so we could easily see a nice rally off of low liquidity or low volume, I should say. Here in the crude oil /CL pushing higher by $1.14, right at the point of control that I've talked about. As soon as we kind of broke back above that $40 a barrel area, I said that it looks like it could easily go up there and test that little point. That's where the most volume and time has been spent for that particular underlying, and should be a very comfort zone because that's where the most buys and shorts are residing. Then on to gold. Gold futures still pushing higher. You know, it's cats and dogs living together. I think bonds are down a little bit, but the overall gold market's still pushing higher as we're starting to see record amounts of institutional size money on the sidelines. A lot of those people have gotten out. This is more of a retail push to the upside. But they have to put their money somewhere, and generally speaking, they're going to put it into the safest type of investments. And gold is one of those that is the steadfast, safest place to put money because it is the most popular precious metal. But here bonds are down a point on the day, back and forth just inside of what yesterday's trading range was, and creating a nice volume and time node right here as the market is looking like the Fed is not going to be too anxious to raise rates anytime soon. Then we have the Nasdaq here up 27 points on the day. Like I said, pushing above this little area. It must need to really get to an extreme here. Well, I thought it was already at pretty much an extreme. We might start seeing a pullback, but rallying much higher on a low volume day. As you can see, the volume continues to slide down, and the breadth as well is really at a historical low here. So that's something to note going forward, that there could be a change in direction coming relatively soon. So keep your eyes out for that. Stay on your toes. Be quick, be nimble, and really don't get too aggressive in my eyes at buying at these points. They're just it's the risk reward is too great. You might be able to get a little bit more of a push, but being a contrarian, I think that this is really the time to start looking to getting short. So /ES up on the day by just about 10 points, just a quarter point off of that. Now, like I said, E-mini S&P is making a new high today, and it's important because it's intraday and really pushing higher. The bulls have just taken control. Bears have not been able to put a dent in this rally at all. On to what I've done. XOP, I talked about this. We are right at the point of control in crude oil. XOP is the spider ETF on the oil and gas exploration and production. It could look better for exploration and production if prices start going higher, but I'm kind of fading that whole mantra with the fact that I think that crude oil is looking to come back down or at least stay right here. So I decided to put on a calendar spread in there. The volatility is really low, and one of the best strategies to put on in this type of environment is a calendar. So I did the October-September 36 put calendar, and I paid 70 cents for it. So I sold the September 36 puts and then went further duration and bought the October 36 puts to help finance some of that. So what I'm looking for is the market could continue to go a little bit higher, and if it still just tracks sideways here, I'll allow those September 36 puts to expire worthless, and then hopefully get a pullback here in the next month or so. So that's what I'm looking for that particular trade. Going forward, Friday's webinar should be a really good one. It is going to be on the long put calendar, so if you aren't familiar with that strategy, you can go to protraderstrategies.com and sign up for that. And keep your eyes out for the Trader Expo. I'm going to be doing a piece on that as well, so you can find out all of that stuff at protraderstrategies.com. I hope everybody had a great weekend and looking forward to a great week forward of trading. All right, if you can't take that, take it easy.